So there's one stock that has gone up over 230% in the past month, and odds are you probably haven't heard of it. So we're going to talk about that today. We're also going to talk about Walmart, Amazon, Whole Foods, Sears, stock market winners and losers, Blackberry, Bed Bath & Beyond, Oracle, and lots more. So anyways, let's get started here. What was that one stock that has shot up that you probably haven't heard of? Well, you probably haven't heard of it because it is a Canadian stock. You might have heard of it in the past few days because Warren Buffett did something with the company. So anyways, we'll just give you backtrack here. The company's name is Home Capital, okay? So Home Capital is a Canadian mortgage lending bank company. It's mainly a lending company, but kind of duels as a tiny bit of a bank, but it's not a major bank. Our major banks in Canada are like TD Bank, Royal Bank of Canada, Bank of Nova Scotia, Bank of, insert province name. But this is a minor lending mortgage credit bank firm in Canada, financial institution. So Home Capital Group, it's been around since 1977. It's been around a very long time. It deals largely in subprime mortgages, which is something that I don't like. Subprime mortgages is a very risky market, but they've been a very successful company for over 40 years now. And they've been growing over the past 4 decades. But then they ran into a problem in 2014. Some of their mortgage brokers were doing some fraudulent stuff and not reporting income properly to the bank, and were just giving out mortgages without even looking at them. This was in 2014. This wasn't in 2008 or 2007 or 2006 when the big crash happened. This was in 2008. So Canada is fairly strict on its mortgage rules, which is why we didn't really have a real estate recession in 2008. We were one of the few countries in the world that actually we didn't even really have a recession in 2008. And so, but this is one of the very few subprime mortgage companies that aren't as regulated by Canada. So in 2014, they were doing some fraudulent stuff with mortgage buyers. So more people actually began defaulting on a lot of those subprime mortgages than they had been in the previous decade. So that was problem number one. Okay, so that was problem number one with this company. Problem number two was because this got leaked out into the news, 95% of its customers withdrew from its high interest savings account. So for those of you that don't know, a high interest savings account, they're available at most banks. They can also be GICs too, which stands for General Investment Certificate. So essentially these are things that banks give out. They're essentially bonds, okay? They're like government bonds, but they're given out by private institutions. So what happened was 95% of its customers withdrew from those, took out all their money from their savings accounts from that company, took out all their money from bonds if they could, didn't invest in bonds anymore in those GICs. And so this company started losing lots of money. People were defaulting. And then they started getting investigated by the Canadian Securities Commissions for misleading investors. So they were having all of these problems here within the last 2 years. And so some perspective was this company in 2014, mid-2014, their stock was worth $55, okay? And then after all of this, they were on the brink of bankruptcy essentially 2 months ago. If the court had ruled against them, that they'd done something fraudulent, they were done as a company. Now, the court actually ruled that they didn't do something fraudulent. They didn't have enough evidence. But it was an accusation. So here's what happened. The stock dropped down to $5.80 1 month ago in May. $5.80. Keep in mind, this was worth $55 3 years ago. And so on my website, actually, in my stock market program, a few weeks ago, this stock, I think I was looking at buying it at somewhere around $8. $8, okay? This was early June I was talking about, or early June, late May, somewhere around there. It was around $8, $8 to $9. And what happened? Today, the stock, or actually as of this morning, it was about $20, okay? The stock was worth it was worth $20.50 as of this morning. Now the stock is actually tanking a little bit right now, which is actually kind of funny that I'm talking about this right now. The stock is down roughly 8% in the past, 20 minutes since I started this video, so I don't know what's going on. However, I'm going to keep talking about this, okay? So why had this stock gone up from $5.80 to right now 17 cents, or $17.50? What happened? Well, as this company was on the brink of bankruptcy, the knight in shining armor showed up. of the financial world, the man who had saved all of the financial institutions in 2008, showed up and gave a lifeline to this mortgage company. Who was it? None other than Warren Buffett. Warren Buffett came to, actually, the company approached Berkshire Hathaway and Warren Buffett and said, hey, would you like to buy part of this company? And can you give us a loan as well? Are those things that you would like? I mean, look at us. Look at us. We've had a 40-year great track record. We're a financial institution. We just had a few scandals. That's why our company is tanking. It's because consumer confidence is no longer with the company. The company's still running the exact same, just consumers are just pulling out because they're nervous that the company is going to go bankrupt. So what did Warren Buffett do? He did this. Berkshire Hathaway gave them a $2 billion loan that came with 38% equity in the company and 9% interest on that loan. This happened a few days ago. So, what do you think happened? Right after that, the stock shot up from $9 to overnight. It went from $9 to essentially like $16. It was $9 to about $14 and then 14 to 19 overnight. So it shot up after that announcement is what I'm trying to say here. So all this stuff compounded. So the fact that the allegations about fraud were dropped on them, that was the big one. That was the big one that prevented bankruptcy. And then this one, Warren Buffett having confidence in the company and investing $2 billion into it, that is the second line of confidence. So that is why this stock has gone up 200% in 1 month. It was on the brink of bankruptcy, and now the Warren Buffett has faith in it. And so I was looking at this stock about a month and a half ago, but unfortunately, my portfolio, I had too much in stuff that wasn't safe, like tech stocks, and so I made an investment into a safer, higher dividend stock. But I was looking into this, and so I actually told my dad about this, and my dad invested it at like $7 or $8, and then he sold it and made a few $1,000s in a few weeks. Isn't that nice? So this is why you got to check out my program so you can see what stocks I'm looking at. I mean, what if you guys had seen that? Seen me looking at it? Maybe you guys would have invested in it. But it is down today, and so that is a downside to this. It is down significantly today. We're talking 8%, but still, this stock is up. In the past month and a half, it's still up 191%. So, I mean, come on. So anyways, I just thought I would talk about that today because most people don't know about it. And I thought it was really interesting because the Warren Buffett news came out about it. It was really cool. And hopefully this company makes it out. Say they're dealing with subprime mortgages. Now I have two views on that because personally in my life, I mean, I'm at a point where I'm making good money. Except I unfortunately can't get a mortgage because I haven't been making good money for 2 consecutive years. I've only been making good money for about a year and a bit now, year and a half now, since everything started. And so, but I'm still gonna have to wait an extra year because you have to wait for tax season and all that stuff. So essentially I have to wait to get a mortgage for another year or so. So I would be considered a subprime lender, right? A subprime mortgagee or mortgagor, whatever I would be. And so that's what this company kind of thrives on. It's a semi-private lender, and they would be giving me mortgage if I were to go to the private route. So I have two views on that. Yes, they're giving mortgages to people who probably have not been good with money, but they're also giving it to young people who are essentially priced out of the mortgage market right now in Canada because young people just can't afford houses right now. It's unfortunate. So because of the rules too, it's not just housing prices, it's also the rules that come along with it. I mean, 2 years and also 20% down payment. And what's the other thing? If you're an entrepreneur, you have to have a 35% down payment, which is, I mean, 25%. So it's, anyways, they're just discriminating against small business and young people. But what do I know? So this private lender helps you get around that. So it's, I don't know. Usually I'm not a fan of subprime mortgage lenders because they end up causing recessions. But in some cases, I guess they can be fine for people like me. Anyways, that is the giant stock. What do you guys think of that stock, Home Capital? Leave a comment down below. Do you think it's going to go up? Do you think it's going to go down? What do you think is going to happen to this company? So keep in mind, just because Warren Buffett invests in this company doesn't mean it's going to rebound. Now, they do have a good track record. It's just they ran, in my opinion, they just ran into a bad time in the mortgage world in Canada. But yet all of the other lenders did just fine. So this is a lifeline for the company to somewhat restructure itself. It'll probably give them about a 1 to 2 year runway to fix themselves, maybe even 2.5 years. That's my opinion on it. I expect this stock to not really go up anymore in the next month or so. We will see what happens. We will see what happens with the earnings, but it's a stock to keep your eye on. I'm going to keep an eye on it too on my program. So anyways, we're going to move on here to the next little bit of business news today, which is Walmart. Walmart outbidding Amazon. What? For Whole Foods? What? I thought that deal was done. So Amazon, for those of you that don't know, it was giant news, made even mainstream media. Not just the business media, but mainstream media. So Amazon is offering to buy Whole Foods. Whole Foods apparently agreed to the terms. The deal has not gone through there. There's a lot of stuff that has to happen, but they agreed to the terms. Amazon offered to buy the stock at $42 per share, which would be valued at $13.7 billion. They made that offer when the shares were worth $33. So they were offering a lot more to Whole Foods in order for them to buy the company. That's why they agreed to it. And just because of the offer, Whole Foods stock went up from $33 to $43 per share. And so Whole Foods still probably is going to go through with this deal. However, there was a kink thrown into this recently by 3 JP Morgan analysts called Ken Goldman, Chris Horvers, and Doug Anmuth. And they said, they wrote a letter or a note to I guess the media, CNBC or someone like that. And they said, we do think there is a chance that Walmart makes a bid. Walmart stands out as the only company in our coverage with the means and motive to counterbid, but the motive is ultimately driven by a defensive strategy. Oh, this is interesting. So Walmart still could technically outbid Amazon to buy Whole Foods if Walmart wanted to delay Amazon's introduction into the grocery business. This is interesting. So I have a few opinions on this. I guess one is that if Amazon really wanted to, Amazon currently has hundreds of millions of dollars more than Walmart. Walmart is still arguably the most valuable company in the world in terms of revenue. However, Amazon right now, they're worth about $700 billion right now. And if they really wanted to, they could take out debt and just outbid Walmart, and there's not much Walmart could do. Amazon is currently making so much money that they could outbid Walmart if they really wanted to. However, Walmart, if it were to put in a bid that's significantly greater than Amazon, maybe Whole Foods is going to back out of that and go with the Walmart deal, if the deal hasn't gone through already. So what do you guys think? Do you think that this is something Walmart should do? So some opinions on this are, okay, this would delay Amazon's introduction into grocery business by, 2 years, maybe. 2 years, 3 years, 5 years, who knows? But it would delay it. It would give Walmart time to set up their online infrastructure to potentially compete with Amazon in the online world. And Walmart's online business has been growing. Obviously nowhere near as much as Amazon, but it has been growing. So this would be a purely defensive buyout if Walmart were to bid. I don't know what the validity to this is, but I don't think that Walmart's going to do it. I don't think that Walmart is going to bid and buy Whole Foods just because Amazon wants to get into the grocery business. So that's my opinion. I don't think Walmart's going to go through with it, but it is an interesting piece of information that got introduced today. Now it is worth mentioning. So what did this do to Walmart stock actually? So after this announcement, Walmart stock went down 1% because I guess investors don't like that news. Walmart stock went down 1% after that announcement from the analysts. So what do you guys think? Do you think Walmart should do it? Leave a comment down below. I don't think that they should. Personally, I don't think that it's a good strategy, because what if Amazon just wants to buy another smaller grocery chain? They could do that as well. So what is Walmart going to do? Buy all of them? Buy all of the grocery chains? So that's not going to happen. But it was an interesting piece of information. I thought I would share it with you guys, and maybe it's a good opportunity to take advantage of a slumping Walmart stock today. I don't really know. What are your thoughts? So we're going to move on to the next piece of news here, which this happened this week, but I didn't talk about it in the past few days. And also, I guess technically it's been happening over the past 20 years. Sears. Sears is dead, which is unfortunate. So Sears, I don't know if any of you know this, Sears was a top 15 company in the world 25 years ago. In the world, they were up there with Walmart. It was like Walmart and then whatever, Exxon and then Sears, or whatever the order was. So this is some perspective for you guys. They are closing down 59 more stores this year in Canada alone, and about 46 in the United States. I heard 50 more in the United States. That's cutting out 2,900 jobs in Canada, probably about the same in the United States. And I just wanted to talk about this today because as a kid, I remember going into Sears all of the time. There were lots of Sears when I was a kid. I was, born in 1994 when Sears was essentially at its peak. And then over the past, here's some perspective. Here's some really, really wild piece of information here. In 2010, Sears had 3,500 stores. Now they have 700, going down to 600 this year. Think about that for a second. When I was a kid, this number was probably around 5,000 or 10,000 stores. I don't even know. It's probably tons. And now they're down to 700. They are dying as a retail store. And so I took a look at Sears Canada stock. Sears Canada, I don't think that Sears has a stock in the American exchanges, but in the TSX, in the Toronto Stock Exchange, their stock in 2000 was worth $40. $40 a share. Okay, in 2004, it was worth about $30. In 2010, it was about $29. Even a few years ago in 2014, it was worth about 15 bucks. Now, today, it is worth 62 cents. 62 cents a share for Sears. This is so strange. Really strange. Now, saying that they still have, they're going to cut down to about 10,000 employees by the end of this year. 10,000 employees. The revenue is about $3 billion. They were founded in 1952, Sears Canada. Sears itself was founded in, 1890s? But they're dying as a company, and it's just really sad to see, because I used to go into Sears all the time, and I was thinking about this today. I haven't been into a Sears in a decade, and I used to be in there every 3 weeks when I was a kid. Seriously, my parents would take me all the time. I don't even know where Sears is right now. I don't think that there is one where I am. What do you guys think? Do you think it's another one of those stories where they're going the way of the dinosaur? All the people that didn't adapt are going the way of the dinosaur. This online world, these Amazons, they're killing Kmart's, they're killing Sears, they're killing the department store. That's what's happening. And it's unfortunate to see, but it's also good. I mean, that's how the world works. Innovation, if you're a fan of capitalism and a fan of the world innovating towards a better future for the average person, then this is good. It just really sucks to see that a brand that I grew up with as a kid they're going to be gone in the next few years unless they adapt. So now there is some word out there that they are adapting to like a hipper, smaller store, but I think it's still too late for that. I mean, they have so much debt. They're going to go bankrupt. And they might have already declared for bankruptcy. I heard that. I think that they might have already declared bankruptcy. So anyways, rest in peace, Sears. We got to move on to the next news topic. So the next thing I want to talk about is the stock market winners and losers. So we're going to start off with the losers first. So the biggest loser today is Bed Bath and Beyond. Oh, what movie was that from? Was it from The Other Guys where Michael Keaton was working at Bed Bath and Beyond and Will Ferrell and Mark Wahlberg were working? Oh, it was the police chief was working at Bed Bath and Beyond. That's right. Anyways, that was a funny movie. But Bed Bath and Beyond, they are down 12.5% as of right now. We still got about an hour left until closing. So what happened today? Well, they released their earnings reports and they weren't terrible. I mean, they weren't at a loss, but their revenue growth was zero. It was actually 0%. And that's what happened. They were expected to have about 1% to 2% growth last quarter, but it was just zero. Revenue growth was zero. So that's what happened. investors didn't like that. They didn't like that there was no growth. And so like, hey, apparently this company is worth 12% less than it was yesterday because they didn't have any growth. Oh well. So they're the biggest loser today, followed closely by the next stock, Blackberry. And I've been talking about Blackberry for a little bit today, or a little bit over the past month or so, as a stock that they've been up about 40% this year. So why have they been up 40%? It's because the CEO of the company announced the different direction they were going into. So they announced earlier in the year, I think even early as last year, that they were conceding the phone market. They are not going to make phones really anymore. They said, okay, look, we know that Apple won. We know that Samsung won. They won the phone market. And so we're going to back out of that, and we're going to get into software, specifically high-end software, stuff relating to like automation, automatically driving cars, things along those lines. And so that's what happened. They've been transitioning into that this year. This is essentially the first year of a new company. They actually started sales for these high-end software and have been trying to grow those sales in the past year. But what ended up happening was those high-end software sales were down 4.7% last quarter. And the news about that came out today. So BlackBerry stock is down 11% as of right now, but it's still up 40% on the entire year, including today. So why do I like BlackBerry? I mean, I don't like BlackBerry as an investment. I wouldn't buy the stock. However, I mean, they're one of the hearts of Waterloo. And Waterloo's where I went to school. I went to University of Laurier. For those of you that don't know, BlackBerry, at its peak, like 5, 6, 7 years ago, they owned, like, without joking, without exaggerating, maybe 10% of the land of the entire city. They had these giant complexes where the entire workforce was. Now, they had to sell off some of those buildings, but I mean, they have a special place in my heart because I hope they rebound. I hope that area of Waterloo rebounds. Now, Waterloo's a pretty big tech sector area. It's the Silicon Valley of Canada. And so it's actually Google has their Canadian headquarters there. So that's another big company. There's a bunch of new giant tech startups there that have been making hundreds of millions of dollars there. So I hope BlackBerry rebounds, and I hope that they do well. All the best to them. But however, I wouldn't invest in them as a stock. The CEO's being like, oh, we expect 10% growth next quarter. Well, you know, look what happened. So BlackBerry, big loser today. NVIDIA, I want to talk about quickly. They're not a big loser today. In fact, the stock's down 2.5%. I mean, that's a decent loss today. But I want to talk about them today because finally, there was some news that came out saying that a bunch of analysts and a bunch of investors are getting nervous about this NVIDIA stock because people haven't been overvaluing it a ton over the past 2 months. So, you know, we're going to take a look at what the stock has been like over the past 3, 4, 5 months, actually. And let's see how much it's gone up. So in the past year, it's gone up 221%. Since November of 2016, it's gone up 119%. And since May 9th, it's been up 51%. So they've had really good earnings, but I mean, 50% in what, a quarter? In a month and a half? I mean, the stock got really overvalued, although the company's been doing well. They've had really good earnings, but their PE ratio is currently 52, which is pretty high, nowhere near as much as Amazon. But for a semiconductor company, that's what they are, right? A semiconductor slash, you know, tech company. Yeah, mobile computing company, and they're in the automotive market. I mean, they don't have a monopoly like Amazon has in their market. And so that was just an interesting piece of news today. Do you think that NVIDIA is overvalued? Do you think that it'll keep going up and keep rocketing high? Now, I do like that they pay a little bit of a dividend, but it's 0.3%, so who cares? But, I mean, I think that the stock is nearing its peak for this year. I think that this company could do very well into the future over the next 2, 3, 4, 5 years and so on, maybe more. It might not, but I wouldn't personally invest in them. It's too risky for me. I think that there's a lot of blind faith along with this company right now. However, you know, they've had a good track record. They've been around since what, 1993, and they've been, I mean, if you invested in them before the dot-com bubble, you would have had a 9,000% return. So what the hell do I know, right? But I just really don't like it. If you look at a chart, if you look at the chart for NVIDIA over the past 5 years, I don't like that it goes like this. It just goes straight up like this. And that makes me nervous. That's why I'm not investing in them. But what do you guys think? Do you like NVIDIA? Do you like NVIDIA as a stock? If you invested in them a month and a half ago, you probably would have done well. And I wasn't talking about them a month and a half ago, because I've only been talking about stocks in this channel for what, about 3 weeks now? So NVIDIA, they are a loser today because analysts think that they're too hot, according to a few analysts that were, was a few analysts? There's about 4 or 5 big analysts came out today from financial institutions, said NVIDIA was overvalued. So we're going to move on to the winners today. A winner that I didn't get to talk about earlier in the week was Oracle. So Oracle smashed some earnings reports. They were expected to have an earnings per share of of about 79 cents per share, and they had about 89 cents per share last quarter. So that completely killed it. Their revenue is 10.9 billion versus an expected 10.5 billion. So they absolutely killed it last week. Their revenues rose by about 3% this quarter. So actually, if you look at their 5-day, I mean, if you look at charts like this, their 5-day chart is exactly like this. So on Wednesday, at 3:30, their stock was $46, and then literally at the very next day, at the opening of the next day, it was at what, $51. It went up 11% overnight. So the stock has gone up about 3% today, and it's gone up roughly, about 10, 11, 12% in the past few days. So Oracle's another big winner here. It's a company that I like. They've been around a long time as well. Is this the Larry Ellison company? Yeah, it's the Larry Ellison company. I was going to say Peter Thiel, but no, he's, what is he, Blue Origin? Blue Origin and PayPal is Peter Thiel. So anyways, Oracle, they're rebounding as a company. They've been around a while. Hopefully that they can keep going. Actually, they've been around since 77, eh? So they were around that Microsoft boom. I thought that they were a little bit later than that. I thought they were like an 80s company, but no, I guess that they started taking off in the 90s, and then they got overvalued in the 2000s. So good job, Oracle. You're a big winner today. What are the other winners? So Netflix, as of this very second, now we're still about 30 minutes to close here. Netflix is up about 1.6%. This is from a bunch of people, analysts going on TV saying Netflix was, one of those things that's replacing cable that apparently no one's known about for the past 5 years. Everyone's known about it. So a bunch of people went on TV. Netflix stock went up about 1.7%. Congratulations. This is why you don't listen to people on TV all the time, because they can just change the stock market by just saying a few words that everyone knows already. And I want to talk about Twitter. So Twitter's actually had a good week. Twitter was at about $16.90 earlier in the week per share. Now they're at about almost $19 a share right now, about 18.5. And finally, Twitter's rebounding. I mean, Twitter's one of those companies where I like them as a company. I like their platform. I'll use their platform. However, they haven't figured out how to do ads yet and how to make money from their company yet. They've been doing okay. They've been doing a little bit better. But they got to figure out how to monetize it better. I mean, here's a thing I was talking about with my girlfriend, actually, was that she thought that Twitter was like almost as big as Facebook, right? I know, crazy, right? So, and then I asked her, okay, even if they had the same user growth and the users were the exact same, where it's still not even close, but when was the last time you saw a Twitter ad? Or how many Twitter ads do you see? It's what, 1 out of every 40 things you see? 1 out of every 50? On Facebook, it's like 1 out of every 4 is like an ad of some sort. And plus they got the side page. And Twitter, so that's what I like to talk about, is that they don't have a good ad service yet. They don't know how to target people yet. And it's tougher. I mean, on Facebook, people specifically like the things that they're interested in. So you can get a good profile of a consumer based on what they like and who their friends are and who they're attached to, what pages they like. On Twitter, it's really tough because you follow people, you might only follow 100 people, and this are specifically people. They may not even be brands. Brands usually don't get as much of a follow on Twitter. So it's really tough, but I'm glad that Twitter's picking up. I wouldn't invest in them as a stock, but I love using their service. So I think that's going to wrap this video up today. So what do you guys think about everything? What do you guys think of Home Capital, Walmart trying to outbid Amazon, Sears, and all the stock market winners and losers today? What do you guys think? Leave a comment down below. Make sure to check out my stock market program, and maybe you could have gotten a tip about Home Capital and you could have made a few $1,000s like my dad did. So anyways, check out stock market program, link below. You're all very beautiful people. Thank you very much for watching, and I'll see you guys in the next video.